As soon as Marco became a subscriber, I knew he was going to be trouble. And of course, I'm just joking. But Marco has requested a very difficult task. Marco has asked me to do an analysis on precious metals. Well, the first problem with precious metals is the pronunciation. Ruthenium, osmium, rhodium, iridium, indium. And of course, Marcos probably only wants to know about gold, silver, and maybe platinum or palladium. But the real problem with precious metals is the opinions are very divided. Either you believe in precious metals as a commodity or as an alternative to fiat currency or not. And if not, you just view precious metals as useless and worthless. Let me read to you two quotes from Warren Buffett. The first quote: Gold gets dug out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. And in the second quote, the problem with commodities is that you are betting on what someone else would pay for them in 6 months. The commodity itself isn't going to do anything for you. It's an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. As a result of the divided opinions, the research on precious metals is very biased and not good in my estimation. So for this video, I'm not going to provide any research. I'm going to go straight to the charts. So let's take a look. Precious metals have been stuck in the doldrums for most of this year as the outlook for higher borrowing costs dimmed prospects for particularly gold, which doesn't pay interest. Even rising trade tensions between the U.S. and China that sent equities and bond yields tumbling earlier this year weren't enough to boost gold's haven appeal as the metal fell the most in 18 months. Geopolitical risks that previously supported prices in precious metals are also fading after President Donald Trump met with North Korean leader Kim Jong-un. Additionally, inflation, still accelerating U.S. inflation, is one reason to remain optimistic on, say, gold's outlook. Bullion has been used by some investors as a hedge against rising prices. The Consumer Price Index climbed to 2.8% in May from a year earlier. However, if you've been listening to me, I'm not sure inflation is going to increase all that much. So looking at this chart here, which is the PowerShares Commodity Index, you can see that they're expecting a breakout. In my opinion, I'm not so sure we're going to have a breakout. Let me show you why. As indicated previously, commodities, and particularly precious metals, tend to do well when there are tensions throughout the world, such as the trade tensions between the U.S. and China, or perhaps a war in the Middle East, something like that. And of course, inflation. Inflation expectations are up now, and that would be good for precious metals and commodities. Additionally, commodities tend to have a negative correlation with the U.S. dollar. That's important. And looking at this chart here, I'll just read you what they have indicated. The dollar remains in a secular bull market. This creates important intermarket dynamics. A bullish U.S. dollar is not constructive for commodities once the U.S. dollar is trending strongly. Now, if strength in the U.S. dollar remains moderate, we believe that commodities may do well in 2018. So they're expecting that the U.S. dollar is only going to be moderate. In my opinion, there might be a rally in the US dollar. And if there's a rally in the US dollar, again, that's negatively correlated with commodities and precious metals. So if the US dollar is going to rally, that means that commodities and precious metals may not do well. So let's go to a better chart of the US dollar. So we have the monthly chart on the US dollar, and I'm using Market Watch, and this chart goes back to about 2007, and the symbol for the US dollar is $USD, or in some places it could be DXY. And as we can see here, at least by the price chart, we had a rally that started here several years ago, and the dollar headed on up, and it's been staying here in a relatively elevated level in comparison to the previous levels here. Now, moving down here into the MAC and into the stochastics and the Williams, you can see that the MAC is bottoming here after several years of a decline. It's starting to bottom here. Now, although the stochastic and Williams are heading up and they're going to exhaust themselves here pretty soon, I still think that the fast line wants to head through the slow line here on the MAC. And in my opinion, if the fast line moves through the slow line, we're going to have an uptrend in the MAC, such as we had here back in, say, mid 2014, or here that we had here in mid 2000, late 2011. So I'm looking for a rally in the dollar, not moderation. I'm looking for a rally. And if there's a rally, the dollar is going to head up. Why do I think there's going to be a rally? I think that the dollar is starting to head up because I think we're going to have some problems in the stock market later this year. And if there are problems in the stock market, then investors, foreign and domestic, are going to flock to the U.S. dollar and U.S. treasuries. And only after about a year or two, when they find out that the US dollar is just simply a fiat currency and lose faith in it, only then do I see the potential for a rally in precious metals. A rally might occur a little bit earlier, but certainly not here in the short term. So let's check out my thesis. In order to do that, let's take a look at the charts of gold and silver. And this is the 20-year chart, monthly chart on gold. And I'm using the ETF GLD. And it goes back to about 2005, so it does not go back 20 years. But this is good enough here. Let me point something out for you here, though. In early 2008 through late 2008, note that gold went down. It went down with the rest of the market there during the great financial crisis. So don't let anybody tell you that if we do have another event in the stock market or the economy, that gold and silver are going to go up during that time frame. It went down. And it did have a pretty good rally from beginning, say, mid 2005 all the way up here into mid 2011. But what we're talking about is over here. And what is it going to do from here? All right. To me, it's been meandering here for the last 2.5 years or so. Let's move on down into the MACD. You can see this meandering here that we did start an uptrend in early 2016, but it didn't do much. And we haven't done much since. And in fact, the fast line to me looks like it wants to cross through the slow line. It's not very dramatic, but at least in my opinion, that means that gold isn't going to do much here in the near term. So moving on down, we see the same thing here in the histogram. The price rate of change is just muddling along the zero line, so there's no real strength kicking in, but it's not going to drop real fast either. Moving here to the RSI, we see that the RSI is dropping. Again, it's just around the midline, so there's not a lot of strength, but there isn't a lot of weakness either. Stochastics heading on down. The volume has been trailing off in the last couple of years too, and then the Williams, of course, heading on down too. So in my opinion, in here at the price chart, the oscillators are telling me that we're going to be doing a whole bunch of nothing for the near term. So I'm not really compelled to move into gold at this time. I think we're just going to meander here for the next year or so. So let's go and see what silver shows. And this is the same chart here for silver, and I'm using the iShares Silver Trust, and the symbol is SLV. It goes back to about 2006 or so. And again, please note, here in early 2008, from there to say late 2008, silver went down along with the rest of the market. So don't let anybody tell you that silver and gold are going to head up if we have a stock market crash. Just isn't going to happen. Now, what we're talking about here in the last few years or so, silver has been going sideways. If you remember, I did a video on silver early in this year. I was contemplating a purchase, and I'll show you why. I actually never did make the purchase, but let me just show you why. The MACD did head up like gold here into 2017, but then has gone kind of sideways. Really not much strength, not much weakness, just been muddling along. Shows the same here in the histogram and as well in the price rate of change and also in the relative strength, the RSI. It's under 50. It's just kind of going sideways. No real direction here. Looking at the stochastic, this is what piqued my interest in early January of this year or so. It looked to me that the stochastics were going to head on up, but we really haven't done much. And this is the only oscillator that's really showing some possibilities. I was looking at this. I did not buy any silver simply because the rest of the oscillators didn't show me that there was going to be any strength happening here. This does still look a little bit better than gold, but not much. And then, of course, the volume just gone sideways. And then the Williams. Williams looks like it wants to try to bottom in here and head up. But as you can see back here into the price chart, nothing has happened while some of those oscillators did improve. Again, we're going sideways with no real progress in my opinion. So overall, Marco, I'm sad to say that I don't see anything in either gold or silver. And so I just hope you're going to be happy with this. Having some other analysis or research that's biased, in my opinion, is just useless. And what the charts show me is that we're going nowhere fast. So for today, that's ChewDog Charts. Thank you.